Let's bring in just another voice in as well. Mayuresh Joshi, fund manager at Angel Broking, joining in. Mayuresh, we're just counting down to the market trading out here. 30 seconds to go. Are you confident of this rebound, or you believe this is going to be short-lived?
It might be short-lived, Priyank, and clearly I think the sentiments are a little bit on the softer side, and add to that a lot of the global pressures still playing trend. So I think one really needs to wait and see how the progress pans out. But at this point of time, my take is that all the sentiments related to that issue and the relief thereof, I think it might be short-lived if the global sentiments still remain soft.
All right, Mayuresh, hold that thought. Let me just quickly run you through the way market openings really panned out. 7848 is what we're seeing as far as the Nifty is concerned. So it's seen that little bit of a move higher, almost 60 to 63 points up on the back of that. Probably some relief coming in as far as the FI MAT angle is concerned. That's probably bringing some bit of cheer, or even for that matter, just could be a technical rebound out here that we're seeing. But there is clearly some bit of green, at least today, is what we're seeing. K in India, as oil prices cool off, again down. Hero Moto, monthly sales numbers there. ONGC, NTPC and Tata Motors all seeing some bit of a weak move today. But beyond that, among the gainers, you've got Lupin, Tech Mahindra, you've got ICICI Bank, PNB, Axis. So the banking majors seeing a little bit of a rebound right now. Bank of Baroda included in that. Bharti and GAIL also in positive so far is what we're tracking. So there is a little bit of green among a couple of these banking majors. Pull out the Bank Nifty for you as well. Remember, that one seen a crack of almost 21% from the recent top. The Bank Nifty in green today, 120, 130 points higher so far is what we're seeing. Pull up DLF, that's the interesting JV that we were talking about this morning. Stocks up nearly 6 to 7% straight away. Gap up opening with the fact that GIC is going to be investing almost 1,990 crores in a JV to build projects in central Delhi is what we picked up just a few minutes back. That's the other mega development that we're tracking today as far as DLF is concerned. But beyond that, among the stock-specific action, Suzlon, Ashok Leyland, once again in green, decent volume seen on both those counters. You've also got some of the other names like Punj Lloyd in focus today. Escorts up as well. Gati seeing some bit of traction. So these are some of the mid-cap names that are on the move today as well, is what we're seeing. Majesco, another stock that's on the move today, is what we're seeing. JM Financial getting some bit of a move higher. Jet Airways again in focus is what we're tracking. Let's get some of the weaker names going for you as well, and where we're seeing some bit of cuts today as far as stocks are concerned, and the way it's really shaping up among the mid-cap names that are actually cracking. Just quickly pull up a couple of the ones on the back of decent volumes that are seeing some bit of a weak move today as far as some of the mid-cap names are concerned. And you've got a couple of the names like Sharda Cropchem once again in focus. McLeod Russell, some of these stocks showing some bit of traction is what we're tracking. But it's actually broad-based rally that we're seeing. The CNX mid-cap and the CNX small-cap index also doing pretty well today. Just pull both those up for you as far as the mid-cap and the small-cap index are concerned. 1% gain as far as the CNX mid-cap index is concerned, and the small cap up by nearly 1% so far. Mayuresh, what about the banking majors? That's where the big worry is. That's where we saw that huge erosion yesterday. Massive cuts coming in, private, public, all being treated in a similar fashion. Are you worried the way the banking pack is panning out?
Again, Priyank, I think one really needs to differentiate, and we've always had a bias towards the private side, and you've seen a massive price erosion happening over the last few days. But clearly, I think this becomes a good opportunity for fresh investments to take place in private banking space, incremental investments, if I may add. So clearly, I think stocks like Axis, Yes Bank, ICICI Bank is where we believe, I think, the value proposition lies. I think even in bad times, I think they were having good earnings growth. And if one really expects that over the next 2 to 3 years, they can sustain the earning growth in excess of 20 to 23% respectively, I think that can boost the return ratio substantially. Yes, HDFC Bank has done a base rate cut, and that might probably have a telling effect. But clearly, I think they would be able to maintain their spreads in NIMs, though it might face some amount of compression over the next few quarters. But once credit growth picks up, I think the volumes will take care of that. So in my opinion, I think it's a good time to invest incrementally. I think 10-15% of your incremental money can go in private sector banks at the current juncture.
All right, so that's as far as what we're seeing in regard to the way some of the cues have been panning out, as far as what we're seeing in regard to the way the banking packs pulling up as well. Just pull out the Bank Nifty once again for you and get a quick mention going as far as how that one's really shaping up. the Bank Nifty has been holding on to gains of nearly 0.6 to a percent is what we're seeing, 106 points higher so far. But Mayuresh, the other debate also has been in regard to the way the base rate cut, the base rate should be panning out. Yesterday again, we heard from the RBI itself, they've actually released those norms to actually align the base rate on the marginal cost funding angle as well. Just your thoughts, if you've managed to take a look at it and what the team is saying in regard to the way the base rate volatility could then play out?
So clearly, I think the new draft rules will have some amount of telling, as I mentioned, on the public sector balance sheets. Even the private side might have some amount of telling effect in terms of compression of NIMs. But again, as I mentioned earlier, I think they should be able to normalize their spreads over a period of time. So I think I'm not overly perturbed, but yes, I think on the public side, you might have some amount of impact as far as the margins are concerned. Couple that up with uncertainty related to how asset quality will pan out, capital adequacy is still remaining a little bit low for a whole host of these banks. I think that does not probably sync well in terms of how their operational performance might pan out. So clearly, I think even looking at the draft guidelines, I think the impact might be there in terms of how NIMs pan out in a shorter time duration, but over a longer structural time frame. Our take is it should normalize, and I think the private space will come out winners on all counts, at least from a short to medium term perspective.
The markets are just again unable to hold on to any significant gains. You're now trading just barely higher by 2 to 0.3%. That's 21, 22 points, and 7,800 again, somewhat under threat is what we're saying. But Mayuresh, just a comment on the way this relief has come in as far as the MAT angle for FIs are concerned. The timing of it probably hasn't really been the best in terms of the way the market reaction could really play out. But just a comment as to how critical do you believe this is going to be, and has this been a big overhang for a couple of your clients as well?
No, clearly I think it is a relief for a lot of the FIs who were probably expected to get affected by the order. But clearly I think the markets are in no mood to probably entertain that at this point of time. I think the global nervousness and uncertainty is so huge that these issues probably will get sidelined. So in my opinion, I think what we are seeing is probably an effect to how the globe is reacting at this point of time, and the uncertainty would continue. I think the volatility in the markets would continue unless we get stability in terms of how data pans out, and nobody is really sure on how the Chinese data is going to pan out, what action the Fed is going to take over the next 3 to 4 months. Even if one really assumes no rate hike in September, I think it is still going to be a telling effect on how the rate hikes will happen, even on a marginal basis. That will have some amount of telling effect on how currencies pan out. So I think the larger issues at this point of time that the market is worried about is how the globe is panning out, how global demand is panning out, how global growth is panning out. I think that is more concerning point at this point of time. And clearly, I think the flows that you're seeing towards the dollar and treasury bonds in the US are an indication of the fact that I think the risk off is clearly continuing into the market unless we see data stability. And there is a big overhang on that in terms of how data will pan out.
All right, let's get a quick run through on some of the stocks in focus this morning. There are a whole slew of them, Mayuresh, that are actually been buzzing today. I want to start off with what's flashing on the screen regarding the fact that TCS, the court has sanctioned amalgamation between CMC and the company is what we're seeing. TCS is up almost 0.6% is what we're seeing as far as discount is concerned in regard to what we're seeing as far as the stock's concerned so far in regard to the way it's panning out. Just try and pull up CMC for you as well and see how that one's panning out 1% higher. Anything on TCS or CMC?
So clearly, Priyank, I think we have a positive bias on the top tier IT names, TCS included in that. And our own take is that if you leave aside Q1, which has a lot of aberrations related to wage hikes, visa costs, cross-currency growth should be quite reasonable for a lot of these top tier IT names. TCS, with its digital foray and kind of premium valuations that it derives in terms of the expertise that it is or client mining that it does and the strong management commentary hereof, I think the discretionary spending that comes through from the US US markets, I think, would aid TCS and a lot of the top tier IT companies. So I think we have a positive bias to just not TCS. I think TCS, HCL, Tech Infosys is where we believe that the cross-currency growth in both US and INR terms should be quite significant. Utilization rates should improve here on, specifically for Infosys. TCS should be able to have its blended utilization rate stabilize, the attrition table stabilize, and clearly I think in terms of how the rupee depreciation has panned out, even that will act as a tailwind. So yes, I think we remain positive on our top tier IT companies, TCS, HCL, Tech, Infosys included.
All right. DLF signing a JV with GIC to invest almost 1,990 odd crores. Mayuresh is the other one that we're tracking. Stocks up almost 4 to 5%. DLF has been on the radar for the last couple of sessions as well. It's seen a nice and steady rebound. Anything there, Mayuresh, when we talk about DLF?
So clearly, I think the story has all been about how do they deleverage their balance sheet. I think one more positive step in that direction, but I think the market needs and demands much more than that. So clearly, I think the known points or the facets that the market is aware is the NCI.
Mayuresh, since we're talking about DLF, let me in fact welcome in the management itself. We've got Saurabh Chawla from DLF joining us on the phone line. Sir, morning. Thanks so much for taking the time out to talk to us today. Well, it's a big development that we've just heard about regarding your JV with GIC. So can you take us to the highlights of it?
Well, it's an investment, an equity investment in 2 projects in central Delhi, where GIC will be investing about 1,990 odd crores. And as you are aware, GIC is one of the large sovereign funds out of Singapore, and have appetite for marquee large projects in the country. And this is the first one that they're doing with DLF, and hopefully many more will happen as we go forward. We had guided the markets at the beginning of this fiscal year that we would be doing private equity slash divestments of about 3,000 crores. With this particular transaction plus the earlier one where we had contracted to sell our cinemas business to PVR, we are now able to confirm that more or less this target of 3,000 crores we would be able to achieve during this current fiscal year. So, from purely from the business sense, whilst the real estate residential market continues to be a little soft, we had strategized to sell a certain amount of equity and some of the non-core businesses to meet our business requirements, and that's what we have really done.
Sir, can you also share some bit of more perspective as far as, as to about the project itself? How do you plan to deploy the money? Where it's probably going to be used? Just to get a sense as to what kind of details you can highlight regarding the project.
Well, this is a project in central Delhi. We have a project called Capital Greens, which was launched in 3 phases, where the phase 1 will start getting delivered to the customers by December, January, in next few months. So this is a project which is adjacent to that, and currently it is in the planning process. We hope to launch the first phase of this current project sometime mid next year. So we await the approvals and of the plans as such. And GIC, by this investment, is actually taking up a 50% stake in this particular project. So it's actually 2 projects side by side, and we hope that we can create a destination out of this particular location, something which we are quite adept at doing. We have done that in phase 5 of Gurgaon, and we shall work and strive hard to create another destination in central Delhi.
Sure. And so, just coming back to the point as far as the JV with GIC is concerned that you've concluded, are you also looking at somewhat of similar deals as far as Chennai or Mohali is concerned? Because that's what the market was talking about a couple of weeks back as well. That's where they were focusing on. If you can share any updates on Chennai and Mohali.
Well, we keep getting approached by a lot of private equity players to partner with us in some of our residential and commercial projects. So we do interact with them, but there is nothing concrete or imminent as we speak. So basically there's a lot of market speculation around those. At this stage, there's nothing which is there, and we hope if something really does fructify where there is a meaningful value addition to DLF shareholders, and we do transact something, then we will of course inform the stock exchanges first before we talk to the media.
And so just to get a quick perspective out here, once just to get a sense as far as how do you see bookings panning out as well, if you can give us some bit of a target as to what you're working with, because you spoke on the way you're trying to reduce the debt burden as far as DLF is concerned. If you can give us some perspective on the business point as far as bookings are concerned and how they're panning out for FY16.
See, again, we keep getting asked about this question called debt burden. There is no burden as such. Almost 14 to 15,000 crores of our debt is actually serviced by our annuity incomes. This year, our annuity incomes will exceed about 2,400 crores. The balance, about 7,000 crores, is actually serviced by our residential side of the business, what we call as a development company. At this stage, as I said earlier, the residential market continues to be soft, reeling under very high interest costs that continue to be plaguing our particular sector as such. But we believe that as interest rates do come off, and I think indications are now that with inflation abating, I think interest rates should come off, and if the market sentiments do improve in the space, obviously our cash flows from our development side of the business will increase, and that will reduce our development company debt. Our medium-term target is to make our development company debt-free, whilst our rent company, where we have stable long-term cash flows, that can continue to have debt as such. So that's the strategy that we will play out over the next few years.
All right, sir. Thanks so much for taking the time out of talking to us, Mr. Chawla out there from DLF. You heard that perspective first on Bloomberg TV India, just sharing the highlights as far as the deal with GIC is concerned, talking about the deleveraging strategy and how they're managing the debt situation right now as far as DLF is concerned. Stock, one of the top gainers in a weak market, and as we speak, you've got the benchmark index almost slipping into negative is what we're seeing, giving off all those early gains that we're seeing as far as the markets are concerned, and you're back on a weak footing is what we're seeing in terms of the way the indices are panning out. There you go, 2 points lower now on the Nifty. If you look at from a high to low, the cuts are sharper is what we're seeing so far. All right, Swati is in conversation with RS Kalsi,